Okay, good morning, everyone. Welcome to another episode of the Crypto Hour. Today is Friday, the 19th of June, and we've had quite a tumultuous week going on. Now, I'll do my usual presentation and look at macro and then crypto events this week. In the meantime, please prepare your questions so that if anything that you want to focus on during this session, we'll cover it shortly after. Let me share my screen to begin with. Okay. Okay, let's start with the macro events of this week. Quite a few announcements. Japan increased interest rates from 0.75 to 1%, which is the highest rate they actually held for a very long time. So they are trying to control the monetary policy in something that's become a little bit out of control. Australia kept the interest rates at 4.35%, but the biggest announcement of the week was the US the US announcement on Wednesday. Let me just refresh my screen. So we had not so much in terms of what was announced, kind of like it's the interest rates in the US stayed at 3.75%, but because it was the first time that the new Fed chair, Kevin Walsh, actually chaired the meeting. So everybody's eyes and ears were directed more than to the announcement of the rate to the press conference to see what their attitude would be for any kind of future attitude and decision making. Now that was it kind of threw a cat amongst the pigeons because it was expected to be a lot more accommodating towards easing monetary policy and lowering interest rates. Instead, we had the opposite. Kind of like it was confirmed to be quite hawkish, and the announcements that probably we will see a rate increase in 2026 rather than decrease like the markets were expecting at the start of the year, followed by rate cuts in 2027, 2028, with the idea that we will end up around 3% at the end of 2028. So at the moment, we are sitting about 3.75%. So the guidance is 3.5 to 3.75. So we could end up with an increase, depending on 10, 15 basis points, maybe to 3.9 before the beginning of the year, before interest rates start coming down next year. Now, the interesting thing, though, is that although there has been this announcement with expected raise in interest rates, the announcement has been taken quite positively from the markets in terms of the kind of the biggest market of them all, which is the bond market. And we've seen kind of medium to long-term interest rates, which are the ones that got where the US government and US monetary policy has got least amount of influence because it's just like too large a market for them to influence with just a change of interest rates. It's actually where the rates have actually come down. So it's if I show you, so let me just go on to um, futures. So interestingly, if we look at the 20-year government bonds yield, after the announcement, which was on when was that? On Sorry, this is February. I've got 15 minutes there. So daily, there we are. This is what I wanted to say. So this is the announcement on Wednesday, so 7 o'clock on Wednesday, where the interest rates were about just short of 5%. Let me go and have a look at it. Okay, so this is the time of the announcement. Okay, with interest rates at 4.955%. Now, immediately, obviously, with the volatility of the announcement, that always happens. But afterwards, when the market has like the time at the time to digest, digest the announcement. So for all of Thursday, the interest rates, the yield on a 20-year plus government bonds has actually come down by almost like 5 basis points, which is fairly significant. I mean, it may not mean a lot. It's when you talk about 0.05%, obviously it's not a big number, but it's significant in the sense that it's going in the opposite direction than what was announced on Wednesday. So they're talking about raising interest rates, and we notice that the interest rates on long term, they're actually coming down. So this is seen as well. So they're seen more on the, I'll say, on the long term bonds, in particular here so from 5 years onwards, we notice this difference in yields. So here we, um, sorry, just got the zoom controls in the way. So on here again, we had a kind of like the 5 year went in the opposite direction, so the interest rates, the yield on it went up to begin with, and then it readjusted a little bit yesterday, but it's still a little bit higher than than it was on before the announcement. So short-term yields going up, but long-term yields coming down. This is Wednesday. So you see 5 years has gone up, the 5 year yield. The 10-year yield is slightly down. And then as we move like at the length, the 20 years and above, really it's an interest rate that is set by the market. And the US bond market, long-term bond markets are the type of products that are held in any central bank, as reserves. So, so this is like a market vote when I'm thinking, okay, was the announcement received positively or not? And the reason why it's going in the other direction is because actually, they can see that they're not trying to please the president or the public, but they're trying to take the hard decisions to control inflation, and which long term could be seen as positive for the US economy. So going back to the announcement, so like the difference from what what the market assumed at the beginning of the year, kind of like a gradual easing of interest rates, was changed completely by the statement on Wednesday. Yesterday, we also have the Swiss franc that announced, basically unchanged rates at 0% interest rates, and also the British pound that announced 3.75%. Now, if we look at I got to look at this, so I'm going to look at the vote. So with a slightly change in that, kind of two of the 9 members now had voted to increase interest rates, and 7 to keep them um, as they are. So the first number is the ones that want to increase interest rates. The second number, the ones that want to decrease it, lower it, and then the third number is like stay as it is. So we're still a majority for keeping the rate steady, but now it's one of the members actually changed their mind, and it's more for raising interest rate to control inflation. Nothing else. Obviously, today is a bank holiday in China and in the US, so not much activity at all. But it's been quite a busy week, and especially this announcements on Wednesday had a big influence not just on the economy and the stock market at large, but on the crypto markets, and has had a big effect on all the risk assets. Okay, so in terms of investment, there are more like steady. plodding along, so to speak, and others are seen as higher risk, and that includes the technology shares, for example, and includes crypto in that calculation, and also items that are highly susceptible to interest rates. And for example, items that don't pay a dividend or a yield. So not just, for example, Bitcoin doesn't, but also gold and silver don't pay any interest. So when the interest rates are raised, there is less of an attractiveness to invest in items that don't pay a return, because the investors could just as easily put their money in bonds and get a better return. Better return than they were getting before the announcement. So if we look at what happened after the announcement, and you can see here we're looking at Bitcoin. They had a good week last week. Went from the low 60s to touching almost 67 and a half. And then comes Wednesday. This is where we were sitting about 60, 65 and a half, 66, I think, before the announcement. Let's have a look. So this is the announcement. Okay, so that's the level of Bitcoin before the announcement. And you can see it dropped straight away for not just immediately after the announcement, but also all day yesterday. And now at the moment is kind of like in that no man's land, deciding if there is enough of an interest to start turning around, or if we continue this downtrend and move even lower. So not just Bitcoin though. So let me just go back to my other watch list. So the immediate reaction in both the stock markets was negative, as you can see here. The drop when following the announcement was quite sharp. Almost like a 2% drop for immediately following the announcement. But since then, yesterday and today, overnight, the market has recovered to just above the position that he had before the announcement. So it kind of like digested the announcement. The same for the S&P 500. The S&P 500 hasn't quite recovered to the level that it had before the announcement. It's pretty much there. So it's very little difference. But in terms of risk, if you go and have a look at the things that the most relevant event of last week was probably the SpaceX launch. And you can see as well as the appetite to hold SpaceX, which looked to increase on Monday and to move to kind of like the new heights, is again has been affected by the announcement on Wednesday too. So we can see here that again we were at about 200 before the announcement, and now we dropped a good 10% to where we are at the moment. At one stage it was almost like 15% drop in a single day. So this is seen as like something that over the long term will do very well. Over the short term, obviously, something that just launched and only a little percentage of the shares are on the market. But it's interesting to see how, where did it stop? Where did it stop here? And it's just like it's a technical, a technical level that it's almost like textbook. So it just literally it touched this demand zone, and just like it's since moved up by about whatever, about 5% or something. So yeah, kind of like from yesterday, you could have made like 5% on, if you were trading SpaceX, and see where you could stop bleeding. Now and this is so this I'm running you through like a few risk assets. So here is another one that you'll be fairly familiar with, gold. So you can see the effect on gold as well for the announcement. We were about almost 4,400 before the announcement. It dropped to 4,120. So it's a big drop, for something as steady as gold. So almost 6%, and then it's slightly recovered, is recovering a bit today. So we're still at almost a 5% drop following the announcement. And this is gold, silver even more. Here's silver. 11.2%. Now, obviously, it's recovered a little bit. Now it's still sitting at almost 9% drop since announcement. So you see that a political announcement can affect lots of different markets, and they're all connected by their reaction to interest rates. Generally speaking, this hasn't quite translated into the stock market yet, but generally speaking, an increase in interest rates, it translates into higher cost for businesses. Okay, higher cost of um, financing the business, about getting loans and so on, so of investment into the business. And so traditionally would be expected to have a negative effect. At the moment, though, the stock market it's behaving like it's on some sort of drug, and it's keep going on, irrespective of whatever is announced. Now, one thing that could affect the markets is again, um, is what is going on between the US and Iran. So what we see here, the turning around last week in silver, in gold, in Bitcoin, in stocks and shares, was pretty much pushed by the announcement that the Iran and the US were coming together for a peace deal. The other announcement we have today is that the talks that were due to happen in Switzerland today have been cancelled. So we are at the moment, we are in a little bit of limbo. Probably you won't see like too much of a reaction today because it's a bank holiday. So the markets are closed today. So you won't see. It's not possible to buy and sell shares today. So you will see the effects of this on Monday. But there are markets that are open, so we might see what happens in gold, silver, Bitcoin, and connected oil and connected market. What's happening with oil? So we see here wait a second, what was this Zoom controls anyway? So from yesterday night, pretty much oil has started appreciating a little again. Not massively, but it had come down by the mid-afternoon yesterday to about $76. Now it's back pushing towards 80 again, 79 and a bit. So again, this is, since yesterday is gone up about 4%. He had a big drop. He had a big drop following last week's announcement. So here it was at $94 and now it's like below 80. So it had come down a lot, but it's again some nerves are creeping back into the market. And if oil prices keep going back up, that obviously affects businesses, again, and affects more than anything else, affects us as consumers, because most of the products that you find in the shops, have some input of oil, whether for transportation or delivery or during the production process, or just to produce energy. Oil is it's part of this bringing products from the producers to the end customer. So if it has an effect on inflation, then it forces central banks to raise interest rates, and then people have got less money in their pockets, and so on. It's a vicious circle that could affect everybody, unfortunately, even if you don't take any interest in stock market, oil, gold, or anything else. Now, going back to Bitcoin. So as we saw, we had quite a nice push up from the announcement of last week, towards the end of the week, moving from the low 60s to 66, 67, and we're going along just fine until the Wednesday announcements. Um, so there were two elements that really affected not just crypto, but a lot of other long-term investments. One of it is the launch of SpaceX. The launch of SpaceX has caused almost like a draining of liquidity from the markets. So obviously people wanted to realize their investment because they wanted to buy SpaceX shares. So, and this is not just, I'm not talking about me and you as single investors, but we're talking about hedge funds and other investment funds that wanted to have exposure to that particular market. So we saw it not just in Bitcoin, in gold, silver, but also on funds, like innovation funds. They already held some of SpaceX shares. People have sold off from those funds to go and buy SpaceX shares directly. So that was, one part of the equation that caused like in the days before the launch of SpaceX, caused like a draining of funds or liquidity from other type of risk investments. But also a lot of this is politically motivated, and the backdrop is again the war between US and Iran that has caused an increase of in oil prices and uncertainty across the world. So the moment that there was some good news about this, the markets went up generally. And the moment that when if bad news creep up again, that would have a kind of like a negative effect on the markets. So here we're talking about Bitcoin, but even if you look here at the stock items, stock markets, at the technical technology shares, like in the Nasdaq, for example, from the beginning of June, until kind of in June, we had a correction that was quite fairly sizable correction. Nothing too dramatic, but prices did drop about 8% from the high. We have since stabilized and kind of pretty much like going and test the previous highs. Not quite as much, but still, both in the Nasdaq and S&P 500, there was quite a nervousness in the markets until the good news about Iran and the US peace deal that brought excitement back into the market. People felt a lot more comfortable holding risk assets in their portfolios, and then the prices was pushed back up. So what happens in Bitcoin is that we're still dominated by fear. And if there isn't any excitement, any push to get back into the market, I mean, this is a market that talks about uncertainty and just people being worried about their funds. And as I say, as soon as there was a little bit of excitement here on the 11th, then the market grew about 10% very quickly. Then some worry, again, interest rate worry, it just pushed it back another 10% or so. So it's very, very volatile at the moment. But the one thing that's been discussed at length is the amount of the drawdown that we had compared to previous examples. So, and this is what, yeah, I mean, if you follow Cathie Wood of ARK Invest, she talks about this quite often. And with the idea that everybody talks about the 4-year Bitcoin cycle. So from the Bitcoin halving event, which happens every 4 years. So the last one was in April 2024, before in 2020, and then in 2016 before then. But if you can see here, in the past, we had from the high to the low, like drawdowns are very, very deep, around the 80% mark. Now, what Cathie Wood was saying, and like many other commentators, was saying that the market now has changed because it's like now the institutional funds have come into the market from this point here, from the early 2000, pardon me, from January 2024, when ETFs, crypto ETFs were launched. Now crypto has become an investment asset, a recognized investment asset, and so has matured somewhat. And with that, what we can expect is a drawdown that's not as marked as we have seen in the past. So far we had a 53% drawdown from the top, but it's very unlikely that we're going to do something like what happened in the past, like a deep 70s that will bring us down to kind of the low 20s. That is very unlikely to happen. I mean, as I said here, we were talking about this last week. At the moment, we can see that Bitcoin is like in a descending pattern, so it's like in a what you call like a downtrend. Interesting that we had a low in February, which was just retested and actually broken again, a couple of weeks ago. But there wasn't any momentum on the downside to actually go a lot deeper than that. So there was the Bitcoin found demand at around 60,000 that pushed it back to the kind of mid 60s. And now with the announcement, remains to be seen if that is enough of an incentive to sell out of crypto and then push the price down to what is considered by many could be like the last push down that could, so we were discussing this last week. I mean, I imagine probably the lowest I can imagine it going would be like the mid 50s, which would imitate a similar distance from the previous the price high of the previous cycle and the low of the following one. Okay, so that was the high of 2017, and this was the low in 2022. The same here. This was the high of 2021, so the previous cycle, and that distance. So we measured, because I'm just repeating this because I know that many of you were not here last week. So if we measure from the previous high of the previous cycle to the low of the next one, it was like a 21% drop at the lowest. And if we were to apply the same to this cycle, 21% would take us roughly to the mid 50s, about 54, 55,000. Now, potentially, as with everything else, as with all the other numbers being more lower, so not having a big swing as we've seen in the past, this would probably be less than what we've seen last time. So we might already be seeing the low having been touched a couple of weeks ago at 59,000, or we might drop a little bit lower either. So it's not, unfortunately, I don't have a crystal ball, but what I do know is that we're getting closer to the point where anytime, so if you look any previous cycle in Bitcoin, where the market has started turning around. So you can see here, that happened kind of like at the end of the year, about November in 2024. In here as well in November 2022. Also in November of 2018. So it's not, we're not going to get a repeat of all the cycles exactly the same, but we are, as we can see in any cycle, the last weeks and months before the market actually bottoms out, they are fairly sedate in terms of price movement. So we're keeping an eye on this. On the long term, the two things to watch are, one is, are we going to create a new low, so move below 59,000, or are we going to interrupt this downtrend? And that means, so it's quite a long way away from where we are right now, but we would need to move back above above 83,000, above that level, then we would have interrupted the downtrend and we're looking for a new directional move then to happen. But at the moment, what is dominating is still a down, the bearish pressure pushing the price down. And this is Bitcoin. So the other big thing to consider is the relationship between Bitcoin and Ethereum. Let me just sorry. So another thing to consider here, and we look at the trend since August of last year. So you see here how, so this is the price of Ethereum in Bitcoin. Okay, so this is priced in the price in Ethereum in Bitcoin. Now you can see how the relationship, it peaked in 2017, but then during like the 2021 bull market, so the Ethereum appreciated in Bitcoin terms, reaching a top in November 2021, which was the bull market top, where and now is at like about a quarter of the level that it was in terms of Bitcoin. So I would say from 2021 till now, it would have paid to stay in Bitcoin rather than be in Ethereum, and that you can read Ethereum, you can read the rest of all coins as well. So what we were expecting during this cycle is to have like a movement similar to what we had in 2021 when the market started turning up. So during this time here, you can see here between December 2020 and May 2021, you can see a 267% increase in the relative price of Ethereum compared to Bitcoin. But both Bitcoin and Ethereum were going up strongly during that time. Just that Ethereum was at a faster pace than Bitcoin. So that hasn't quite happened during this cycle. Okay, so we haven't had this kind of altcoin cycle yet. So we had almost like a little try, like excitement for a couple of months in 2025, but then this relationship keeps going down because the market hasn't quite digested yet all the extra functionality that you can get through blockchain and through smart contracts. So at the moment, yes, Bitcoin has proven its case as a store of value, but the market doesn't still see the value of the increased value of the programmable smart contracts that are represented by, in this case, by Ethereum. So obviously not just Ethereum, but the altcoin crypto market is fairly muted. So these are all this chart here is like the whole of the crypto market excluding the top 10 coins. And as we can see, it really hasn't taken off during this cycle. We haven't even touched the high of 2021 yet. And we dropped quite significantly, by 2/3, even since December of 2024. So this move is almost like waiting to mature, but as usual, we wait for Bitcoin to move first, then the big coins will come after, the big altcoins come afterwards, and then the rest of the market follows. But the relationship of Bitcoin to the total market cap has remained very, very elevated. So you can see at the very 58-59% of the total market cap in crypto is represented by Bitcoin. And this is what happened in the previous cycle that we haven't seen in this cycle, where the total market cap by the time we got to to the high of 2021, the Bitcoin only represented about 40% of the market. The rest, the other 60%, it was the rest of the altcoins. But as you can see, since 2022, it just going in one, pretty much almost like in one direction, and we're still waiting for that this move to actually play out and see Bitcoin back at below 55% in terms of the proportion of the overall market cap. So this doesn't mean that Bitcoin price will go down. Like it didn't go down during this move in 2021. Bitcoin actually trebled in value during this time, but just that many altcoins went up, 5 times, 10 times, 20 times during the same time. So they were growing much faster. It's just a relative, this chart only shows you the relative price of altcoins compared to Bitcoin. And we can only see looking at historical data that from 2022 till today, if you were invested in crypto, having Bitcoin would have paid you a lot better than having having other crypto coins, with very, very, very few exceptions. Just a couple of so this week there isn't that much to report, in the sense that most of the news are like of a political nature. But on a couple of things I can share with you, and we'll look at then at the ETF flow as well. So this is one, well, obviously what's the US-Iran talks have been cancelled, and Trump's demands unconditional surrender. So the markets are on edge again. So we'll wait to see how that develops over the weekend. But if it doesn't change, then you will see the results of this on Monday. The other important thing to notice is about the Clarity Act. So this is going through, at the moment, is going through the Senate, and there are kind of like quite a lot of negotiation to come to a draft that can be put to a vote. Now it's being discussed on the main floor of the Senate, and they are trying to work it so that they can do it before the August recess, by the end of July. So here, as I say, the Charity Act talks into the final stretch before August recess. So the expectations is that this will be voted into law, before the last quarter.
100%, thank you.
Sorry. Okay, guys, if you make sure that you're muted. And when that comes through, is this is the legislation that everybody's waiting for, to then see anything related to crypto being pushed heavily by companies, because at the moment nobody wants to get engaged until they know what the rules are and what they can or cannot do with their enterprise crypto initiatives. So the moment that is voted into law, then we're going to have certainty. It could be good, bad, or indifferent, but definitely we're gonna know what the rules are. So at the moment that the bill determines that the SEC and the Security and Futures Trading Commission are going to have roles related to digital assets. So the expectations are the Future and Trade Commission, the more weight they take in the process, the better it is for cryptocurrency, because basically it means that they would have a similar treatment to commodities, which is what everybody wants. And if you've been following crypto at all, over the past few years, the battle against the SEC for not denominating crypto tokens as securities, which cause almost like an impossible situation for many brokers or many exchanges of having to do particular KYC that it's impossible to do in the crypto world up to a certain point. So those are the things really that we are waiting for. And the other interesting thing, so this is the expectations of raising at interest rates at the 29th of July Fed meeting. Now that has gone up to almost 40% expectation of a rate rise. And so the probability has gone up quite a lot of that there would be an interest rate rise in at the end of July. And this is what the markets are repricing. So this is what causing, immediate calculation to see, okay, what should be our exposure to risk assets, if interest rates go up. So once the market has digested this, then we will be able to probably within the end of next week, we would see the result of how the market digested risk assets, with what not just Bitcoin and crypto is doing, but also like gold, silver, oil, and all other. So that in the majority is where you're going to see, obviously some of the more advanced technology shares as well are highly dependent on interest rates as well. And we'll see what it means to the market, this announcement that you heard this week. Just very quickly going to have a look at the Bitcoin ETFs. So they have seen like as you can see, an outflow from the crypto ETFs. So in particular from Bitcoin ETFs. I say we were talking about the liquidity as we were discussing before. So this week hasn't been too bad, but we're still at 90, 170, 220 million roughly have been drained again from Bitcoin ETFs after like a big drawdown that we had last week too. So it seems to be, in a way, coming down a little. But again, we'll have a better idea by next week to see what's happening in that. Also, if we look at the crypto fear and greed index, you see at the moment we're sitting in extreme fear. So very, very low readings. Very, very low readings. And from another indicator as well, which is the kind of like an indicator of the crypto cycles, which is the Bitcoin, the net unrealized profit and loss, called the Nupal chart, which is being used extensively in the past, referred to almost like pinpoint when Bitcoin reaches a moment of excess greed at the top, and that indicates the top of the markets. So during this cycle, we've gone nowhere near it. Normally that level is at 0.75%. So we touched about 0.60, 0.6, 0.65, I think, during this cycle. At the moment we're all the way down at 0.1. So again, extreme fear at the moment in the market. We haven't got into like capitulation mode, which would indicate levels like below zero. But it shows that there's also there is a lot of room on the other side of it. So we're definitely sitting now, if not at the bottom of the market, close to it, and we'll soon get into another period of growth like this when the market starts going up, because there is trust and excitement, and then feeds back onto the market. And when we are here at the top is when the biggest increase happened, because I'll say people are generally followers, and there will be more people that buying Bitcoin at 100,000 per coin that they buy now at 60,000. So you can take it for granted that's going to happen when the prices start, because everybody's worried about losing money because they see prices going down, but they don't think that represents an opportunity to buy a premium asset at a discounted price. So yeah, pretty much that was it for this week. Let me just stop sharing and see if there are any questions on the board. But feel free to unmute yourselves and ask either a question or if you want something to add that you would like to contribute for the group to listen to. Eric, go ahead. Yep.
Good morning. I wonder with Bitcoin, we know it's gone up because of the possibility to store money that way. But I wonder when the other coins go up because of their value in the market, because of blockchain, because of all the cases there are on the different coins. And I especially look, of course, for Cardano. Why doesn't it go up? Isn't the market paying for cases, for use cases with that
Oh,
coin, or
oh,
also
okay.
Ethereum?
Yeah, no, that's a very good question. So there are we can see from two different angles. Okay, so where Bitcoin has taken the store of value, concept has been widely accepted across the investment world, and almost like the main reason of being almost like a digital gold. Um, with all the other coins are more linked to utility. So their value will, one, be determined by how widely these are used by users for anything, and two is that sometimes you need a catalyst. You need a reason to increase the level of volume, because at the end of the day, price is determined by buyers against sellers. So if there are more buyers than sellers, prices go up and vice versa. So sometimes you need to give people a reason to do that. During the last cycle, that craze, was down to NFTs, for example. So we saw the kind of incredible prices, some of the digital work like Beeple, they sold for millions of dollars per NFT, and we had moment that there was so much trading on NFTs across Ethereum that one single transaction, sometimes costed hundreds of dollars. During this cycle, we still haven't seen that, and although there is now a lot of work behind the scene to, for example, bring assets to the blockchain, like even securities and things that are traded. And this is where Cardano comes in, because they've done a lot of that work, behind the scene, but we still haven't seen the traffic in volume to justify an increase in prices yet. And it's not just Cardano, but it's the same for Ethereum, for Solana, for most of other blockchain. The only ones that have kept their price relatively well are the ones that they have got like a use case that is more niche and more defined, like Hyperliquid. That is used for trading, so for high volume, so let's see a high volume of trades going through the system. But for the rest, we really do need to start seeing the first use cases that are kind of mass use cases that still hasn't quite translated into but the point is that the work behind the scene is going on, even during the bear market. It's not that they stop working if the tokens are going down. What it means is that sometimes it's more difficult to fund some of these projects, because obviously, they funded these projects by selling coins. And if the coins are worth less, then it's they can raise less money, because people still need to get paid. Developers need to get paid, and the work that is put behind developing new features and everything needs to be financed by someone. So the two models are, one, you have the Cardano model, where is the community that finances new initiatives, right? And the other model is like the VC, venture capital, where there are an investor that comes in, but the investor obviously expects to make a profit. So if they put money in, they want to take out a big chunk of the value out of that development. So there are big disadvantages of having a large number of venture capitalists in some market, because at some stage they're gonna take they're gonna run away with the toys. And you don't know when that when that is going to happen. Um, so really what we are waiting to see is the really first mass use cases for blockchain. We're getting closer to that because probably the biggest use cases at the moment could be one is that securities being exchanged 7 days a week rather than just limited to market hours. And the other big use is identity. Identity that is immutably stored in the blockchain, and so there are definitely several chains that are active in that they could move us forward. And all of a sudden, if that started being used for identity, then we could have like literally billions of people that could access that technology that you only need a phone for, by the way. And it could become the first case that brings people into crypto in extremely large numbers. Yeah, so I know we're all bleeding, Eric, in a way. So those
Yeah,
of us that go with big investments in crypto, we're all bleeding obviously because the prices of pretty much everything is really down to very, very low levels. Cardano is back at 2021 prices really. And the same with some of the other tokens that you know gone up to incredible levels and they come crashing back down to dropping 80% plus. You know.
thank you, Luca.
So, yeah, we're all watching that and with bated breath. Any more questions or contributions? What is the question? What have you always wanted to know about crypto, but you always been too afraid to ask? Anybody wanted to say something, or I might give so if nobody wants to ask question, Jonathan, are you there? Do you want to do a little? So there's a few new faces here. Maybe you want to also present what you're going to do, what you do every week after this session as well, like a brief introduction to what you do, and also post the link as well so that people have the link there available to come and follow you.
Yeah, sure. Thank you. Uh, I hold a session following this each Friday where I answer any questions about anything crypto, really. And I focus primarily on Cardano, although I'm thinking of rebranding and relaunching to Midnight, which is a privacy chain, and that's got a lot more activity and people asking questions at the moment. So we cover all topics and all chains, but I know most about Cardano at Midnight. So yeah, you're very welcome. And that's really practical things, getting onto your first wallet, whether that's soft or hard wallet, or deep governance discussions about the future of the planet and how blockchain impacts it. So yeah, happy to talk. I'll drop the link in and maybe see some of you.
It's very interesting, guys. I mean, if you haven't been to one of the Jonathan sessions, because we were discussing before, like exactly what it is that blockchain can do on a practical level. So we talk about price going up, price going down, this can happen, that can happen. But the reason behind, things going up or going down or whatever are in actual what Jonathan is talking about. Because at the end of the day, people react to what can be done on the blockchain. And the more there is that you can do, and the more use cases you have, and the more price will go up eventually. But it really that is the driver after all, to saying, okay, this is a new technology, obviously, but how useful is it going to be in the future? And so these are by seeing the projects that are active on Cardano or on other chain, you can start to realize how how this technology can be that really pervasive and be used in so many different fields. And that's why you get people like Cathy Wood and whatever being very excited about the future potential of the technology. And so many VCs are moving into this space.
Mhm. Yeah, there's always a tension between new technology and existing established frameworks and ways of doing things. And Cardano crypto is probably the most disruptive. So the fact that it's trying to replace Wall Street and the traditional financial markets means that there's always going to be a big pushback. So the price action has to be ignored if you're going to push through and adopt new methods of working like this. So yeah, take heart. I'm sure the chains that we've been talking about most here have got bright futures. It's just down at the moment. You can't look too closely at that. You've got to look at what the utility is, what the actual use case for humanity is, and it's still very good. I mean, there's constant discussion coming up on latest technology that blows my mind. I can't really grasp it yet. It's wave upon wave of innovation. It's very good.
Yeah, definitely. If you guys want to have a look of, for example, the ARK Invest report, talking again from the company that Cathy Wood runs, that concentrates on new waves of technology and investing in companies within those fields. They've had a similar activities. A lot of their funds have gone down in value over the years because of the work hasn't quite gone to the point where it becomes like a cash cow and start producing vast amount of revenues. But it's still that work needs to be done before you get to that point. Like the Googles of 20, they weren't worth this much 20 years ago. Actually, it's taken a while for the technology to come to the fore and become one of the most valuable technology on the planet. The same as some of the projects, a lot of the projects that I've been working on today will become the Googles of tomorrow. So that's the thing to remember. That's the thing to remember. But even the Amazon or the Google of this world have had big drops of 80-90%. Amazon went from over $100 to $4 in the past. So if you were one of the early buyers of Amazon, would you have kept your shares when it went down to $4 or not? So that's a big question, because that's the investment question that we face as investors. If you see one of your shares losing 95% of its value, would you have had the belief to hold on to those shares? Or at least if you sold them maybe halfway, would you have bought them back? That's a big question, because it's easy to say, over a 10-year period, the shares are gone up from, I don't know, $2 to $1,000. But what happened in between is very important, because our emotions are involved. So just think about the what's that, Jonathan?
So there's a picture of Elon Musk back in 2008 when he was picking up the parts of one of his first rocket ships. I think it was his third one from the beach. They were out of money. They didn't have any. They couldn't afford to even hire rescue crew, pickup crew, and so the engineers were out there picking up the bits of the rocket. And what did that look like an investable business in 2008? And now we see SpaceX, the largest IPO, just mind blowing. So new technology could take a while, it could look bleak in the meantime, but
yeah, no, exactly that. So remember this is a really good picture to finish on. So remember this with some of the investments that you're doing for growth for the future, and just don't look too closely, in the sense that you should be having like a 10 miles look on this, and you should remember the reasons why you want to invest in certain areas. Okay, so with this, I'll leave you for another week. So I wish you all a fantastic weekend, and I'll say we'll have a much better idea of how the market has absorbed this week's news by the by the end of next week. Okay, so until then, enjoy the nice sunshine. If you're somewhere in Europe, this should get some nice weekend. If you're in Australia, we don't care because you always got sunshine. So for for once you can suffer a little bit. We can have nicer weather than you are. Okay. So have a nice weekend, everyone. I'll see you next week.